Hey guys, what is going on? Welcome back to my Robinhood portfolio. As always, hope you guys had a fantastic day of trading today. Today I want to take a look at a style of investing that I've been using on the Robinhood portfolio for quite some time. A few investors on the channel have been asking about the particular type of investing, so I thought I'd just kind of do a video describing the investing strategy I use on a few stocks, not all stocks, and a stock strategy I've been using from the inception of the Robinhood portfolio. And that type of investing is called a contrarian investment strategy. Basically, you're trying to buy stocks, individual stocks, or even in particular market sectors that may be inappropriately depressed. Basically, they're performing badly, not performing as well as other asset classes, and then you try to buy those stocks when they're depressed and then sell off when they start rebounding for a very, very nice return, trying to maximize that return actually. You're essentially using one of Warren Buffett's famous quotes. Basically, you are greedy when others are fearful, and you are fearful when others are greedy. So you're not necessarily buying into the hot stocks, momentum trading, stocks that a lot of the analysts are recommending to buy. You're basically buying stocks like GE here, General Electric, that as you can see here, have been rebounding nicely, but over the last 3 months down 7.63%. Over the past 1 year down 12.63%. Over the last 5 years, it's only up 30.85% when the market overall is up 90 to 100%. So you're trying to find individual stocks like this, or even market sectors to buy into that you think are inappropriately depressed, and then when they start to rebound, they will rebound quite nicely. Something like this. You buy here, and then you see this nice spike up in the price of the stock, and then you go ahead and sell off for either a very nice swing trade or even a longer term trade as well. And GE has a great dividend yield, so this stock you could potentially just hold forever. Longer term hold, 5, 10 plus years, 2.943%, blue chip company, very large market cap in the middle, as you can see, 215.32, and that's even with the price of the stock depressed, as again for the last 1 year, 12.63%, and really you can see that upticking here. At one point it was down even further than that. So these stocks are very, very good for quick turnarounds, but again, you have to be very careful because a lot of these companies simply may be dying companies that will never rebound, but other companies like GE here, with the appropriate changes, can make a very strong comeback. And that's the whole point of this style of investing. I've also utilized this with Ford. Let's jump over to Ford. Another stock that I think has very, very good long-term potential. It's been on an absolute tear over the last month or so. Last week, up 2.58%. Over the last month, up 9.94%. As it was dropping here, let's go to the 1 year graph here. As it was dropping down here, I was buying in more and more of the stock. You can see here, I now have a very large holding of Ford, 4,225 shares, over $50,000 worth of Ford. And I think this is a great stock. You can see here, it's rebounding quite nicely here over the past 1 month or so. And the reason I like this stock is that it's a blue chip company. It's got a very low PE ratio, a price to earnings ratio. It's a very large company, blue chip company, $48.04 billion for the market cap. And it's a company that will be around forever. I don't see Ford ever having a business model where it's going to be necessarily in the same situation as a lot of other large companies that are sort of in their death trends, like Sears, for example. I don't see Ford ever doing that, especially not over the next 10 to 15 years. So I like Ford for the dividend payout. I like Ford for a contrarian investment as well. It's somewhat depressed overall. You can see over the last 5 years, it's only up 49.27%. Again, the overall market is up 90 to 100%. Over the last year, it's only up 4.04% when the market's up about 19%. So I think this company is very undervalued. It sells millions of cars a year. It literally has profits in the billions of dollars, $5, $6, $7 billion net profit. So it's a very profitable company. Its PE ratio, like I said, is very low. And the dividend yield, 4.946%. The dividends that are doled out to investors per year, that particular percentage is not even half of what the company is earning in revenue. So it's got a very, very good dividend payout ratio as well. So all the numbers are pointing to the fact that Ford is a great long-term buy and hold stock. And the other part that I like about Ford is it's a great day and swing trading stock as well. The price is low. It has a lot of market variability here. It's fluctuating its price up and down quite nicely here, which makes it good for getting in and out of the stock. You can see it's peaking and dipping and peaking. Typically when it peaks down, I buy, for example, 100 shares. When it peaks up, I sell off half that. When it peaks, or when it dips down again, buy another 100 shares. When it peaks up again, sell half of the shares that you have. That's been a strategy I've been using for quite some time, and I have very, very good returns overall on Ford. So that is the type of strategy I've been employing on the Robinhood portfolio. A lot of different strategies I'm using, but a couple viewers on the channel have been mentioning to me, why am I buying stocks like Ford? Why do I like stocks like GE? And that's why. A contrarian investment model, basically buying when a stock you think is depressed more so than it should be. You buy into that stock. When it rebounds, you have a very, very good rate of return on the rebound, better than it would be if it was simply a stock that was at its normal market price, or what you thought was a fair market price. By buying these stocks when they're depressed on their particular stock price, you have a much better rate of return when they do start rebounding. So that's kind of the contrarian investment strategy. You can use this on a number of different stocks, individual stocks, or market segments as well. Energy, for example, is depressed right now. Buying into energy may be a good play moving forward. But again, it kind of depends on what the overall market does. You're really trying to buy stocks against the grain, basically stocks that are not favored by other investors, buying those stocks up, and then when the market does start to rebound, you have a very, very nice rate of return. So that's why I'm buying Ford. That's why I like stocks like GE. Yeah, kind of with that, I'll end the video. If you guys have any questions about this style investing, please let me know in the comment threads down below, and I'll do the best to get back to you as quickly as I can. And not to make the video too long, I'll kind of end it there. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. Also, be sure to hit that bell button by the subscribe button. That will alert you to all new content, all new videos that is posted on the Robinhood portfolio here. And again, if you guys have any great video ideas, let me know. Always looking for new things to read up on and new videos to put out. So kind of with that, I'll end the video, and we'll see you guys next time.